Hey, good afternoon. Welcome into a Monday, December 14th edition of Market Talk. I'm your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com is where you could find us, our home on the web, and also social media at Market Talk Ag, Facebook, Twitter, and Instagram. And shout out to some of our great radio affiliates, including KIAI in Mason City, Iowa, KWAT in Watertown, South Dakota, KGNC in Amarillo, Texas, and also stations in Bethany and Cameron, Missouri, part of the Alpha Media Farm Network. We thank them for being affiliates with Market Talk. Well, it's a Monday and a pretty interesting day in the market trade. We saw beans higher. Wheat futures, though, kind of took it on the chin here to start off the week. Let's talk about it. Let's bring in our guest, our friend with Total Farm Marketing by Stewart-Peterson. Bryan Doherty joins us here on Market Talk today. Bryan, good to see you. And man, I tell you what, to start the week, soybeans saw some good news, but that wheat market, some of that news out of Russia really kind of hit that wheat market today.
Yeah, Jesse, thank you first of all, and happy December 14th already. My goodness.
Yeah, I can't believe it.
Yeah, and I think what else happened here too is the spread traders. That is, they'll buy beans and sell wheat, for example. If they kind of smell something on both sides of that, they're going to jump on that really quick. And it looked like the bean market was finding some general support from, I'm going to say, two areas. One is prices are holding. So you kind of look at this big picture and go, okay, 175 million bushels of carry. That's pretty slim. And there's rain in the forecast or rain coverage. But again, it doesn't look like it's going to hit everywhere. And the amounts are going to be varied. So it'll take a lot of good moisture with a lot of coverage. So I think the trade bought the beans on that. But also when they saw the opportunity to buy beans and sell wheat, and wheat had 3 days in a row up and then really took it on the chin today, I think some sell stops were triggered there. But the news generally is that Russia is considering this tax, and whether it's a tax or whether however you want to, if they limit exports, whatever the case may be, it means less supply available to the market. That's the net of it, and it or more supply, however you want to look at when you put a tax on or take it off. So the trade wasted little time looking at this and saying, well, it looks like if you rather than limit exports, tax, you're probably going to see more supply available to the market. So they bought the beans and sold the wheat today.
Yeah, and really, love the observation as always. And on that wheat side, especially that Russian news kind of seemed to be the big driver there today, Bryan. I mean, we were down, a good 15 cents, almost 20 cents in some contracts. Didn't matter if we were talking Chicago wheat, KC wheat, Minneapolis spring wheat. We were all just down across the board today. And I think for our wheat producers here in the U.S. and in the Plains states, this is a storyline that's just not getting any better. We just haven't really had good news the last few months for wheat producers.
You haven't, but let's look at the flip side of this. So the lack of good news is really when you look at world supplies, beans, world supply, and then ending stocks. Real tight. U.S. You're looking at stocks usage in beans, the lowest in 7 years. Corn is starting to edge down there. We got a big report in January. Some think the yield in corn could come down some more. We'll see, but it's already at 175. Started out the year at 184, at least at the peak. But when you look at wheat, there really isn't any concern about a shortfall of wheat worldwide. The two variables this year have been COVID. What does that actually mean for two things? One, for shipping capacity and shipping lanes, or are you going to loading docks going to be shut down? That was early on in the year. The second is security. Do you hold wheat back as a food? Does Russia hold wheat back as a security measure? And they seem to have kind of wavered on that as the whole COVID thing is kind of broke out in spring. Nobody knew what to do or how to handle it. It kind of went away. It didn't go away, but it got lessened in summer, and then it came roaring back in fall here and early winter. So a lot of dynamics there, but suffice it to say, if I could just cut to the chase, the world is not going to run out of wheat anytime soon. There's ample supply.
Well, and that's something that, it's a storyline we'll have to watch here moving forward. And obviously, that Russian news, I think, will be one of the key drivers in this wheat market as we move into next year. Soybean side, we talked a lot about this market, Brian, and we mentioned, that shrinking carryout number and, tight supplies there globally and beans today. We found some of that support around that 1170, 1175 range and really just, I think that's maybe a welcome sign for producers here after we saw a little bit of maybe a technical correction the last few days, Brian.
It is a welcome sign. The other thing I think we need to kind of think about here is that from a more practical standpoint, are farmers in a position on a setback? I'm talking 20, 30 cents. Are they really in a position that they're going to sell a lot of beans? And the answer is no, because they don't have a lot of beans to sell. And I think beans either have to get weaker to panic farmers or people are holding inventory to say, well, I better get rid of this stuff, or prices got to get higher.
Yeah.
Or enough time's got to go by and they just kind of stay here and then, reevaluate after the first year and get a better look at the South American crop. Those are the things that really should drive the bean market in the next, let's say, 6 weeks. Weather being the most dominant factor, though. So, the simple question is, are bean prices poised to go higher? They sure are. Will they go higher? Well, I would argue today that's going to be a bit of a tall task because I think the crop, or it looks like the crop today is in better shape than it was 2 weeks ago or a week ago. So you got an improving crop. The market's holding. Basically what it is, Jesse, is the jury's out yet. You can't make a judgment call on December 14th. There's not enough widespread rain. Yet on the other hand, there's not enough just burnout to really say this crop is really going downhill.
Yeah, great thoughts there. Let's move over to corn, talk a little bit more about this corn market, because I think, Brian, on the flip side of soybeans, we've talked about this before. A lot of producers might not have a lot of soybeans to sell. They might have already done some marketing there, but they might have some corn sitting in the bin to sell. And this market, we're holding steady. This 420, 425 range. I know December options are going to come off the board here. But just looking at this corn market in general, looking at the South American crop, what we're seeing down there in Brazil and Argentina and so on, and just seeing where this corn market might head the next few weeks. I'm very optimistic. I'm very bullish on this market. What are your thoughts on it?
It's hard not to be optimistic. Now, bullish might, mean different things to different people.
Okay.
But if you look at, let me give you an example of where the soybean corn, now this is on new crop, so we'll deviate a little bit here. But if we look at the new crop November soybean price and divide December corn into that price, that ratio right now is 2.57. So that would suggest right now that soybeans are going to pull acres from corn, usually about 2.4, 2.45. You start to see that historically. 2.50 is kind of the crossing threshold. Now it's 2.57. So that would tell us that you may have to see a bit of a fight for acres, or we're just going to see a few less acres of corn next year because the market wants more beans. So that puts this in a precarious position. You've got the U.S. right now considered the cheapest corn in the world market. You've got a dollar that has, in general, a downtrend, U.S. dollar. So it's hard not to be optimistic on either the export front, maybe the acreage front, maybe just the technical front. There's a yet 1.7 billion bushels is still probably what we would term adequate for the year ahead. So prices don't have to move right now. And in fact, they have stalled with this 1.7 billion bushel carryout. They ran up and now they've stalled. Price of corn isn't any different now than it was 30 days ago.
Yeah.
It's okay to be friendly, though. A lot of usage, great demand under the market. Exports, those are strong, and there's a lot of talk that China may need to import more, and that could come directly from the U.S., and then that would chip away at carryout, too. So some, after last month's, or this report last week, this month's report, the December supply and demand report, they're thinking that eventually around a 1.5 billion bushel carryout would be a couple 100 million bushels less than what's currently on the books.
Hmm. I'll be very curious and optimistic to see what we have with this market as we move into 2021, and especially with those January reports. I think you mentioned this a little bit earlier. I think for everything, those January reports are going to be a very big storyline in this marketplace. And then, obviously, as you alluded to, the acreage battle coming up for next year in the U.S. I think those are going to be the two very key things that are going to drive this market here in the next few months.
No doubt about. Once we pass over into the first of the year, the one thing, if I could say, that does concern me about corn is if we get another 3 weeks, 4 weeks down the road, and we kind of look at the southern hemisphere and go, things aren't really that bad. They were pretty dry,
Mhm.
driest in 40 years in parts of Brazil. Now that's, things are in better shape. They're going to plant this second crop corn. The market. So you got that. Two, I think that from an income perspective, there are a lot of farmers that just don't want to take income anymore here in 2020. They're pushing sales off or they're weighted out. But I think you're going to see the sales from farmers pick up into the new year as well. So those are two things that concern me. I step back a little more than that. Boy, if you want to take one thing almost to the bank, and that is take a look at the trend of carryout, which has been continually downward in corn and soybeans, and the overall trend in prices up. So this inverse relationship is very strong. And if we get any kind of chip away at the carryout on either of those, look for another leg higher.
Well, Brian, let's shift over to livestock. I want to talk lean hogs. A good day in the lean hog market today, is that December contract is getting ready to expire. That February contract seems to be a spot where traders are looking to do some buying and maybe try to move this market a little bit higher. We were up, over $2 today in that February contract. We were up, almost a little over $1.30 in the April contract. On the hog side, are you encouraged by anything that you saw today?
Well, I'm encouraged the way that now that February is the lead month, how it took one day basically to try and catch up to the cash index
Mm-hmm.
and the traders to shed the December and buy into February. So I'm encouraged with that. I'm very cautiously optimistic that we'll continue to see demand in the, let's say, in the more near term into the winter months, in particular from China, but they are on a very strong rampage and ramping up their hog production. So I'm leery in the, kind of in the macro picture. We still have, it's not as cheap as it was, but we still have high quality, affordable feed for producers. And when we see that, we generally see supply numbers. How do we measure those? Well, daily slaughters, and they are just significant. They're around 500,000 a day. I didn't check what the Saturday kill was, but I think we were at 2.4 million coming into a Saturday kill. That's a lot of hogs. So the market still has to absorb that. With that being said, though, again, weaker dollar, good export sales, good world demand, expectations for COVID vaccine to continually grab hold, and consumers looking to buy. And you've got economies that are good, not great. You got strong stock market. Hogs could be considered undervalued. I would be really careful, though, to fall into this trap to think they have to rally a lot. I just don't think I believe that. So I'm cautious, and I'm cautious on those summer months too. You're toying around $80. It's not a bad place to be hedged for summer, or at least puts bought against.
Yeah, great thoughts there. Let's look at cattle, Brian. This cattle market recovered today, finished, pretty quiet right around that unchanged mark. Feeder cattle, especially, holding those values on the board around 140. I know, cash trade was a little disappointing, it seemed, last week, just with the way we started, and then we kind of just lost our momentum as we went through the week last week. Slaughter speeds, they're still stout. Box beef prices keep weakening. We're looking at the COVID headlines and seeing, we're going to get these vaccines going, et cetera, how that's going to factor into our markets with livestock, et cetera. Just looking at this cattle market today, I'm curious your thoughts on where we ended up, and especially this feeder market. Are we going to be able to, push this market higher than 140 right now? We've been holding there, but I'm curious. Do you think we can go a little bit higher yet?
Well, the back months seem to indicate we can. If you look at like the August, we're new contract highs again today,
Mm,
and you're right up against 148 and a half. I think 148.62 is our high today. So you've got some really good deferred month activity. Boy, feeders have had a really good recovery this year from when they bottomed out with COVID, and um, that's a sign of a couple of things. One, there's just a generalized belief that there's a limited supply of cattle, and with dry pasture conditions,
mhm.
in particular in the West, you got to give some thought to the idea that maybe these cow numbers aren't going to be quite as robust or big as you'd expect. Um, so the feeder market seems well supported. You got quality grain, you've got hay left over from last. You've got a lot of good stuff. I do worry about the when you look at those drought monitor maps, if that isn't maybe changing kind of the view of supply availability down the road. Um, the live market, though, boy, you talk about boring. It's been
Mhm.
boring, and I
Yeah.
just think it's got this tug of war between what appears to be enough supply and COVID in the sense of what's it look like for the next 2 or 3 or 4 weeks? We're talking about a vaccine on one hand, the other hand, we're talking about governors saying stay home, we're shutting Christmas down.
Yeah.
um, it's so the market doesn't seem to really know what it wants to do, and the trade really doesn't want to stick its neck out too far. Um, I certainly want to be optimistic into the April and maybe beyond window, but I don't know. Maybe the board already has that factored in at near the 118 mark, and we're not
Mhm.
just going to get any better than that until we really see these cutout values reverse course and really start to move.
Yeah, it's gonna be something to watch, and one thought I have too, and maybe you can touch on this a little bit. I wonder, are Packers, feedlots, are they gonna pay some of these prices that are on the futures side? We kind of keep having that tug of war there, and I don't know if we can break above the levels we're at right now. It'll be interesting to see the dynamic there moving forward.
Well, it'd be nice if we had some better measure of demand, or at least expectation for demand.
Mhm.
I think that's what's keeping the money out. Otherwise, we'd probably be maybe in those deferred months, April, maybe June, another $2, $3, $4 higher,
Sure.
and just kind of gather this momentum into the winter months. Still, the other thing that hasn't really happened this year, usually we get one or two events either in November or December, is we just haven't
Mhm.
had any of this real adverse weather. And so cattle guys that I talk to, they are just, their cattle are gaining well. And there's just no what I call evaporation days, just days
Mhm.
where the cattle don't gain anything. So you lose a day's worth of weight gain because they're just struggling with weather or muddy lots or
Mhm.
respiratory or what have you, as a whole. And
Sure.
I think anybody in the cattle business, you know, they feel pretty blessed when they don't have to have too many of those days in a year.
Very true. Very true, Brian. Any other final thoughts you have for us today here on Market Talk? Anything you want to touch on?
I just my same message, just be vigilant and continually just think about what happens, if the markets move, and are you prepared for that? So kind of really big on the sort of preparation. We have this saying that prior planning prevents poor performance. And it's so true. If you're ready for things, if they do happen, you're ready, if that makes
Yeah.
sense. So often it's the markets start to make a move when we least expect it. Then you find out why after there's something. So uh, I always kind of joke at this. Nobody sends me an invitation in the mail to open up and say, "Hey, we're going to have cattle, $4
Mhm.
higher next week or $4 lower." So just the preparation for that is really key. The other thing too is just the holidays are coming up, so just want to make sure kind of a big thank you for the opportunity, and a Merry Christmas to you and your listeners.
Yeah, well, thank you, Brian. And I know we didn't get to our dairy update today, but if producers want to reach out to you for stuff like that or any other marketing advice, you and the team at Total Farm Marketing by Stewart-Peterson, how can they do that?
Well, get a pencil and paper and write this down: 800-334-9779. Just a quick phone call. We've got great advisors here. I'd say start with asking for me. If not, John's, on your list too. So ask for John Heinberg, and we'd be happy to just field any questions on whatever it is, whether it's strategy, outlook, technique. Let us know, and we'll work with you on that.
Brian, as always, I appreciate the time, and we will talk again soon. Thank you so much, sir, and have a great rest of your Monday.
Yes, sir, and just keep it safe, and thank you.
Yeah, Bryan Doherty, Senior Market Advisor with Total Farm Marketing by Stewart-Peterson, joining us today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, December 14th edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.